For a long time, Canada's economy has been deeply intertwined with that of the United States. Trade between the two nations has shaped numerous industries, from mining and energy to transportation and manufacturing. However, Washington's recent trade policies have prompted Canada to reassess its economic strategy. The once steady relationship is now transitioning into a determined push for independence. Canada is no longer waiting for the U.S. to dictate its path, it's taking control of its own future. This shift has been a gradual but decisive evolution. The U.S., assuming Canada had little choice but to adhere to its trade regulations, employed tariffs and other trade threats to bolster its own industries. But this strategy has backfired in an unexpected way. Canada has demonstrated its ability to stand on its own by accelerating 18 major projects in mining, energy, and infrastructure, rather than backing down. This isn't merely a reaction to tariffs, it's a strategic move towards long-term economic resilience and enhanced global autonomy. One of the most significant areas of Canada's breakaway is its oil and gas sector. For years, Canadian crude has relied heavily on U.S. refineries, with the majority of its oil flowing southward through pipelines serving American markets. However, this reliance is rapidly changing. Canada is now prioritizing the development of new east-west pipelines that will retain more of its oil within its own borders, keeping resources within Canada rather than channeling them through the U.S. These projects will enable Canada to reduce its dependence on American energy infrastructure and access new global markets for its products. Instead of processing its oil through U.S. refineries, Canada will be able to handle it domestically and ship it to buyers in Asia and Europe. This represents a seismic shift for global oil markets and Canada's energy industry. Canada is also diversifying its trade partners, ensuring its economy isn't solely vulnerable to U.S. trade practices. Simultaneously, Canada is making significant strides in embracing green energy. The country has rapidly increased investments in wind, solar, and hydropower, strengthening its energy grid and reducing its reliance on fossil fuels. This transition isn't just about environmental responsibility, it's a strategic move to insulate the nation from global oil price volatility and potential trade restrictions. By establishing a robust clean energy foundation, Canada is future-proofing its economy and positioning itself as a major global provider of green energy solutions. The mining sector is another crucial area where Canada is asserting its independence. Clean energy, electric vehicles, and advanced technologies are shaping the future of the global economy, and they all depend on critical minerals like lithium, copper, and rare earth elements. China has long dominated the supply chain for these resources, posing a potential vulnerability for nations dependent on foreign suppliers. However, Canada aims to change that. By accelerating mining projects and investing in domestic mineral processing, Canada is becoming a key player in the global supply chain for these vital resources. This strategy ensures Canada can meet the growing demand for these materials without relying on the U.S. or China. This shift positions Canada favorably in international trade negotiations as countries worldwide scramble to secure reliable sources for their technology and green energy sectors. Beyond oil and mining, Canada's ports and logistics networks are undergoing significant transformations that will have lasting global trade implications. The country is investing heavily in modernizing its shipping facilities and expanding its port capacities. These enhancements will not only expedite Canadian exports but also provide an alternative to U.S. shipping routes, allowing Canada to bypass American transportation networks when necessary. A key advancement in this area is the development of shore power technology, which enables cargo ships to connect to clean energy while docked, reducing emissions and costs, and making its ports more environmentally sustainable and efficient. Canada is also streamlining its regulatory environment to attract foreign investment, further establishing itself as a vital global trade hub. Simultaneously, major port expansions, particularly in Vancouver and Prince Rupert, are enhancing trade efficiency and export capabilities. This is a significant step towards reducing Canada's reliance on American transportation routes and providing direct access to global markets. Faster shipping times enable Canadian businesses to lower costs and enhance their competitiveness, while also mitigating the potential impact of future U.S. trade restrictions. These long-term initiatives are not merely reactive, they are transformative, reshaping Canada's economic future. The country is rapidly securing its independence in critical sectors like industry, energy, transportation, and mining. By prioritizing self-sufficiency and global market expansion, Canada is ensuring its economy remains resilient and competitive in an increasingly uncertain world. This shift sends a clear message to Washington: Canada is no longer content to be an economic extension of the U.S. Instead, it is establishing itself as a leader in trade, energy, and technology, proving it doesn't need a single market to thrive. While the U.S. remains a significant trading partner, Canada's reduced dependence alters the balance of power in North American trade. The global market is closely monitoring Canada's progress with these ambitious projects. Investors, businesses, and policymakers are all keenly observing the nation's rapid transformation and its implications for international trade. If successful, Canada could emerge as a major economic force on the global stage, fundamentally altering the dynamics of North American commerce. The coming years will determine whether Canada's push for autonomy is a fleeting response or a permanent transformation. The long-term success of this shift hinges on effective implementation, market stability, and sustained investment in key industries. Should Canada successfully navigate these challenges, it could solidify its position as an independent economic powerhouse, no longer defined by its trade relationship with the U.S. This shift could have profound implications for the future of North American trade, demonstrating how smaller nations can reduce their reliance on larger partners. The ultimate question remains: will Canada's bold strategy succeed, or will the challenges of restructuring its energy and trade sectors prove insurmountable? The years ahead will reveal whether this move cements Canada's status as a major independent player on the world stage or forces a strategic retreat. One thing is certain: Canada is no longer waiting for Washington's approval. It is forging ahead with a clear vision for its economic future, and the choices made today will shape Canada's place in global trade for decades to come. But one thing is for sure: the country is no longer going to do nothing. Absolutely nothing. While waiting for Washington to say, "Okay," the world is paying attention as Canada takes charge of its economic future. Not only is Canada's economy changing because of U.S. trade policies, but it's also moving in a direction that will secure its long-term independence. The country is not just diversifying its trade ties, but it's also making significant investments in new global markets, energy, and infrastructure. In this way, Canada ensures its economy isn't dictated by any single partner, especially the U.S. These moves come with risks, but also opportunities that could position Canada as a major player in North American and global trade. Canada's increased focus on renewable energy is a significant part of this transformation. Once a leader in oil and gas, the country is now pioneering in green energy. Substantial investments are being made in wind, solar, and hydroelectric power, especially in rural and remote areas that need reliable energy sources. Over the last 5 years, Canada's solar energy capacity has grown by 92%, with nearly 96,000 new installations across the country. This shift isn't just about reducing emissions, it's about building a more stable and diverse energy sector. By investing in green energy, Canada insulates itself from global oil price volatility and positions itself as a key supplier of clean energy to international markets. With Europe and Asia seeking cleaner energy alternatives, Canada could become a major exporter of green energy solutions, a stark departure from its historical reliance on fossil fuel exports to the U.S. There's no doubt that Canada is moving beyond being solely an oil and gas producer, working diligently to build a more diversified energy economy that's less susceptible to trade tensions. Canada is also modernizing its infrastructure to facilitate economic growth. Beyond its energy needs, the government has invested over $4.1 billion Canadian dollars since 2017 to enhance transportation networks, including roads, railways, air travel, and shipping routes. These investments aim to improve both domestic and international trade by reducing congestion, lowering transportation costs, and improving efficiency. A pivotal component of this transformation is the Gordie Howe International Bridge, slated to open in 2025. This bridge will provide a direct link between Detroit, Michigan, and Windsor, Ontario, streamlining trade between Canada and the U.S. By upgrading its infrastructure, Canada ensures its supply chains remain robust and adaptable, even as it reduces its reliance on the U.S. market. Beyond infrastructure, Canada is making significant strides in its trade strategy. While the U.S. remains Canada's largest trading partner, the country is actively forging new and stronger relationships with global markets to diminish its dependence on Washington. Canada has strengthened existing trade agreements and established new ones with Europe, Asia, and emerging economies, opening up new markets for its energy, agricultural, and technology exports. This diversification strategy provides Canada with greater leverage in international negotiations, offering alternative markets for Canadian goods should the U.S. impose restrictions or tariffs. This shift ensures the country's economic security isn't solely contingent on Washington's decisions. Canada isn't just reacting to U.S. policies, it's proactively shaping its trade future by securing agreements that serve its long-term interests. This transformation is exemplified by Canada's first liquefied natural gas, LNG, export project, backed by Shell and set to begin exports in 2025. Targeting Asian markets, this project will reduce Canada's reliance on the U.S. as its primary energy customer. By focusing on alternative partners, Canada signals its intent to no longer be viewed as merely an extension of the U.S. economy. However, this ambitious plan isn't without its challenges. Diversifying trade routes, upgrading infrastructure, and establishing new industries require substantial investment and strategic planning. There's also political resistance, as some sectors still depend on U.S. trade and fear the repercussions of distancing themselves from their largest market. The long-term sustainability of Canada's independence strategy will depend on the effective execution of these initiatives. The global reaction to Canada's transformation is also noteworthy. Some nations view Canada's growing autonomy as a positive development for global trade, while others, particularly the U.S., may perceive it as a threat to their economic influence. Should Canada succeed in establishing new trade partnerships and expanding its energy exports beyond North America, it could reshape the traditional balance of power in international commerce. Washington, long accustomed to Canada's close alignment with the U.S. market, is now witnessing Canada assert its own path.